But thank you everyone for coming. There's a special webinar I created to just help add value and try to give back to the community. And I want to show you, I started as a student Michael Blanc, maybe a long time ago. Maybe now it's like, I think I decided to join in 2018. And then I started my journey learning and at the time there was no deal maker guide, so Cody is no Cody. It was just me going through those online course, and then I had a mentor. And so I think in early 19, how this story is very ironic. I was an eager student in the Michael Blanc program, and I said I wanted to get a deal, my first deal done as a student. And what happened was there was this other student that was trying to help. I was trying to help because my mentor said, "Hey, we got someone here. She's a student and single mom, and she's worried about raising capital, and she wasn't a type to ask people for money. Didn't know how to ask people for money, and was nervous. Um, and I was first, I had no experience either, so I was like, okay, let's have a Zoom meeting with her, and let's see if if we if we get along, and then let's see if I can do anything. I have no idea if I like the deal. And at that time, and I can show you the picture of that deal, because that's how I led to my first deal. So this is technically my second deal as a GP, but my first deal as the lead sponsor. But the first deal I was in my website was really this deal. So this deal, I could pull in my portfolio website, and it has this deal called in here. And this she lived in Atlanta, Georgia. And we sold this one as our first selling on the holding here. It's called Brighton Manor. And I was invited by my mentor to help capital raise for this deal. It was a 34 unit townhome. And I flew there to see it and meet her for dinner. And I said, you know what? I'm gonna help you on this as a co-GP. And not knowing I can't really promise anything because I don't know what I can really do. I was just too brand new at the time in 2000. It was like 2000, early 2019. So now thinking back, I was like, wow, it was a long time ago. So then I walked the property and I said, you know what, this looks a pretty nice property. Maybe I can bring some folks in. And I tried to help her, and I raised very little money. I think it was like 100 to 200,000, I recall, somewhere around there. It was very little. But I think that's what she needed to kind of get to the closing table. And that was my first deal as a co-GP. And she led it. She lived there, and I helped her. And she was like the boots on the ground. Initially, she had a very bad property manager who did not lease up the buildings. There was some sewer issue, and it was performing poorly. And then she had her gut feeling was telling you have to fire the manager because right now, based on what we see, she wasn't performing to do the renovations properly in time and didn't get to the rental value. So we hired a different manager who I knew, and then she turned it around, and she had an incentive for her staff to, if you could leave a certain amount of percentage, you get a bonus. So her structure actually incentivized the on-site staff, and we got this leased up, and we sold this one. This was my first co-GP deal. It's 34 unit in Atlanta, Georgia, and we did very well. Like 2.2 point something X in like 2.5 years. So that's the one that I was trying to help her as a student when I was in Michael Blanc. And then ironically, when I was touring and having dinner with my partner, I got a phone call from one of the broker I was speaking to. And the broker was someone who I was talking to, saying, "Hey, I'm working full time as a tax director. I want to put my vision into multifamily, my heart and soul, and I want to get a property maybe somewhere near you in OKC, which is like from Dallas is literally like maybe 3 hours drive north. So from my home, I drive 3 hours north on the 35 corridor. And at that time, because it was very heated in Dallas, it was very hard to get deals because at the time it was like over asking, and that was 2019. it was asking over the dollar amount, and they wanted a lot of hard money. So I was like, nah, I'm gonna go to Oklahoma City, get an off-market deal where it was not competitive, and we didn't do no hard money. We just did like a 30 days DD, and then if you don't like, you can back out, and you can get your earnest deposit back. So we went to look at. I got two off-market deals. I was speaking to a sort of a junior broker who was more like a property manager full time, and he was like a part-time sort of broker, but he knew some like Cushman and Wakefield brokers, and that's how I got that connection. That's how I was able to get two off-market deals, like a 56 unit, which is this one, and a 72 unit, maybe 15 minutes away, but that one's like 40% occupied. This is like around 90% occupied. So that's how I go to a 90% occupied because I can get a Freddie Mac loan. So for that, you need 90% occupancy to get the agency loan to get favorable rates. Whereas the other one was more like bridge, and I didn't want to go that route, being a first deal, because that was more risky for me to do a very heavy value add deal. I was 40% occupied, and that was my first really my first deal. So I was like, nah, I didn't want to go that route. So to play safe, I went to this route, which is more stable. It was like 90, I think the rent was 94% occupied. And I started working on this deal, and that's how I got that connection. And it was really because me just being honest with him, laying out my story, my vision, and he believed in that story, and that's how he got me two off-market deals. Ironically, when I was closing on the Atlanta deal with helping my partner, who was a single mom and was worried about raising capital, and was kind of introverted because she didn't know how to talk to people, and I guess educate them about syndication and passive investing. So that's why I helped her and we closed on that one. So now in this one, this is my mentor, Drew Whitson. He was the head coach of Michael Blanc. Uh, he he's an adjunct professor in Minnesota, Twin Cities. He's a great guy. He has like three kids. And right now, at the time when I started, I think he only had like 100 million. Now he has 500 million. And we're both partners. We do deals together now. So I partnered him on a building here last year. I think it was last year or so. We bought this building together. This one's called a built to rent property. It's a 94 unit, beautiful class A in a very high suburb of Columbus, Ohio, and it's doing very well, phenomenal. And on top of that, Drew was working on changing the HOA because in the Freddie Mac rules, they don't like you to have an HOA. So we had to kind of like do by the rules where you make it like almost like you change the structure to not necessarily HOA or self-managed, meaning we're the HOA, but we had to follow the Freddie Mac guidelines. So that's something new that they're doing. And in doing so, we able to get the tax reduced by like I think 30%. So that helped us in the actuals to meet the projections. And we also beginning had a trouble with the on-site manager. We were monitoring her, and then we had to let her go and hire someone else, and that changed the dynamics on the on-site manager, which increased the efficiency of this build-to-rent Columbus, Ohio. So that's the deal I did with. So every single deal I did was with my mentor. He was like my key principal, balance sheet guarantor, and he helped accelerate my growth in this property. And now we have another deal that he's gonna send me tonight. I think it's like 100, 200 units in Louisville, Kentucky. Maybe that's be the next deal that I partner with my mentor on. But that's the deal that we did together recently. Okay, so back to this one. So he's my mentor, coach, and in a way, inspiration because he gave me a lot of, he helped me through when I was a student, I didn't know much, and he helped guide me through this. And over time, I can see he's a very nice guy. So him and Michael Blanc are kind of my inspiration and my mentor. I also had other mentors as well along the way. I had like Hunter Thompson for raising capital. I had some other people. Interact Neil Bawa for his data analytics and economics and some skillful raising capital tools that I learned from him. So it's important to have mentors in your life. Okay. Okay, so that's about me. I'm a CPA. If you don't know, I'm a CPA. I was in Michael Blanc. I was a mentor, and I have done over 200 units. The most recent one we closed was this one. I'm very proud of it. I helped one of my fellow neighbor here. We closed together on a deal. It's a little smaller in size, but it's actually a really good deal. It's a 32 unit Class B deal where we got for 62 a door in Dallas, which is unheard of. That's like you can't find that deal in Dallas. So we have built-in equity, and we recently renovated the empty unit within 1 week. So now we're able to take that and rent out that unit. Then we'll go to the next storage unit 1 week, rent that out, and then the five renewals that we got that was due, we did 200 rent bump, and they all said, okay, we're gonna stay because next door was 300 like $300 higher. We don't charge $200 higher, and then they all stayed and renewed. And we started implementing RUBS the following month. So next month, we're starting RUBS. So water, sewer, and trash. It means ratio utility billing. When an owner did not charge back the water, the trash, you can do an allocation because of using the laundry, you're using the lights, and you can charge back to tenants a pro rata that's reasonable, and they pay for those fair share, living as a community. So those are the value add for this deal, and we're just closing this one. Okay. Okay. So let's see. Now we'll talk about, so in this deal, okay, let me move this down. So here's a little summary of this deal that I did. Back then in 2019, I was a student and I was hungry for my first deal. And we got this one, it used to call Colonial Apartments. And Colonial Apartments is very interesting. The owner had as an extended stay, like almost like a kind of like a hotel motel, Class C. And that Class C, he converted to an apartment building, to multifamily. So what happened was he was one of those landlords who didn't take care of it. It was kind of tired. It looked old and deferred maintenance. So he sold it to me for only $1.85 million. I think it was like 30 something a door for 56 units. So it's pretty low basis. And so I got built-in equity in this deal. He was fairly easy to deal with when I talked to him, so he wasn't that difficult. And we just needed 70,000 to raise a capital and close on this deal. Now, how I did this is a very interesting story. I was nervous, like Cheryl Gervie, the single mom with three kids in Atlanta. I was a little nervous myself because I didn't know, because I helped her raise only like 100,000, 150,000 the first deal, and that was through my best friend that knew since when I was like young, like a teenager, and maybe my relatives. Then I said, how am I supposed to raise $750,000? And I just closed that deal. Like, how was to do this? I mean, I wasn't really sure. And so I started creating a little local meetup in Dallas, and I went to someone's meetup, and I met this person, and we had Korean chicken wings here in Dallas. And I said, nice to meet you. My name is Jonathan. I'm a real estate investor, and I'm a tax guy too. And he said, yeah. I said, yeah. I said, I wanna ultimately retire again, getting income from multifamily. He said, really? And he got interested. So I passed him my card and I said, come, I have a meetup maybe in 2 weeks. Why don't you come to my meetup? And I'll show you like a sample package or something. We call it a sample deal package in Michael Blanc. This is what is referred to as sample deal package, where you create some kind of deck. It could even be a fictitious deck. It doesn't have to be real, but some kind of deck that you can show him to kind of explain the situation. So I put this together and I was like, Bobby, this is what we're looking at right now. This is the project I'm working on. As I told you, I have financial freedom in mind. I want to do this. Hopefully, in a few years, I can reach to a level where I can feel like I can leave my job, help others, and create that mission. Kind of want to become a Bill Gates and Melinda Gates, and I want to donate like $100 million to a non-for-profit. And I said, if I can do so, obviously wonderful. So then he looked at it. He goes, you know what? I really like this. I really like this. You know what? I think I want to invest $50,000. I was really surprised. I was like, what? This is the first guy I talked to, and I didn't know he's gonna put $50,000. Then I said, if you know anyone, you can help me raise. I'll give you some equity or something. And then he's like, okay. And then so we create this kind of partnership, and then there's this meetup, and that's how we started raising this capital. And then where it went up like this was when I went to Michael Blanc's Deal Maker Live, which is a multi-family annual event here in Dallas. It's one of the bigger ones. It's like a Shamrock and one of those big ones. And I met a person who's like me, who's new and kind of hungry. And we had dinner tonight. We're sitting outside my hotel lot. We're saying, hey, I want to learn this. I said, well, teach you this, but you gotta help me, bring in probably like half of this money. Because 750, I need like maybe 350, 400,000. And she said, okay, instead of paying the coaching program to Michael or someone, I could invest in your deal. And then she brought in her family and she brought like 400,000. And that's how I got this 750 at the end. Um, and then at the end, one of the guy who said yes, he backed out. And ironically, when I got a new job as head of tax in my new firm, the guy who sat next to me in my staff, I told him, hey, do you want to invest in that real estate? I got a good deal for you. And and he looked at it and he said, yes. So he was my last guy who got backed out, came into my deal. So that's very ironic too. And he's still my friend today. We'll have lunch next week and he wants to put money in and be a repeat investor and also help me get investors as well too. So it tells you that you have to kind of tell who you are, explain your situation and see your vision in your story, and then they'll like you and then they'll support you and they will grow your kind of your system and your your influence and your family and friends through that circle. So minimum was $50,000, 70-30 split. We projected on 21% at the time. It was actually 1% asset management fee. So those are the kind of fees that we have. We do each quarter. So that's a summary of this 56 unit deal. It has one office. And that office, I decided to, so I was a little confused because normally it's just multifamily, but I had an office, so it was kind of like a little strange. And in the past, the office was lived by the on-site property manager named Barbie. And I was like, what should I do here? Because I could rent it out, but it's not easy because it's not like like an office that's like in Dallas we can rent to like lawyers and so it was kind of like a weird sort of a space and a size. So it took us maybe like a good 5 to 6 months to find someone who wants to rent that space in that office because it wasn't your typical office. It wasn't your typical street either. And it was in a multifamily complex. And we found someone who did a franchise for dog training. So she teach dogs how to sit down or how to for obedience. And she rented a spot from us. So that's very interesting how we found out that spot and she rented that spot because we gave her a little discount. And I guess it also was cheaper than anyone else in the neighborhood. That's how we get the office rented out. So 56 units and one office. Okay, so it's 56 units here. It's in OKC. So that's in if you don't know OKC, it's very big, it's the capital of Oklahoma. Moore is maybe like 15 minutes, 20 minutes south of OKC. And then you have Norm, which is OU, Oklahoma University. And it's pretty nice, it's a Class C town. So you can see this the building right here. And you have HVAC on top, so it's Class C. And here's the office I talked about. Well, I didn't know what to do with this thing because because what happens is 56 units is not big enough, like 100 units and above, to have an on-site payroll. So you need part-time nearby to come by. So this is not warranted to have a full-time payroll and pay him full-time, $80,000 a payroll. So effectively, I had to figure out what should I do with the space and who will rent it because this is a very unique space. So luckily, we had someone rent it at the end for like a year or 2 years. I think 2 years lease. And this is how it looks like. And what we did was, okay, our vision was this. So this was kind of originally how it looked like. The owner had like this. And then we said, okay, we're gonna do something. We're gonna benefit. We made, change the floors. We painted it. So we did things that we need. So you gotta renovate where it's needed. So when you see that floor is like like the carpet's ripped, you gotta change the floors. You gotta do what is needed. And you save the rest where you don't need it. So with the owner, the apartment, the reef, they did this new sign here. We painted the doors blue here. So we cleaned it up, we power washed, did all this. We had the facade painted, fixed the beams, pest control, put some new these tables here, picnic tables, and we put this pet thing because a lot of pets around there. I even try to do event with a local yoga company to come out and do like morning yoga. But I realized that doesn't work because you're not in a Class A area, you're not in a really a Democrat makes sense. So when I tried to do that, it didn't work out. So it's more in these Class C areas. I don't think that's do something that's more like not for profit or one of those that makes more sense here. So we tried it and that didn't work. So now see here. So this is where it's at, and here's the Air Force Base here. This is so Oklahoma, and so this is where it is here. So it's a really nice town. It's close to the city. It's suburb living. Your classy area, and you have all the you need Lowe's and Walmart. So my staff, Martin, was surprised when he drove up there. He saw all these things. He thought it was in the middle of nowhere. So that's why he's happy that he invested in this deal. So if you know Oklahoma City, pretty large town. It's I think to me it's a great city. The only downside I don't like is the tornadoes. It's a tornado alley. I just don't like that. That's why I left OKC and not invest in OKC anymore because of too many tornadoes, too many like spin-off storms, and that's a problem. It didn't hit luckily it didn't affect this property, but some other ones it did. But this OKC. It has pretty large stuff. So when I put this together in 2019, my vision was okay. First, we're going to increase the rents because the rents were under market over the course of the next 2 years and rent the old units, modern standards. The second was how do I make the gas and electric back to build back the tenants. So how do I do rubs? So my property manager, okay, we can allocate the gas, the water, and some of that back to them because all bills paid. So then you think to yourself, there's two strategies. You can do all bills paid, meaning that you pay for everything, but you increase the rent. So effectively, you have rubs built in. Or effectively, you can just lower it, but charge them rubs. And it's tricky because in this situation, it's been there for a long time. So the only way you're gonna do that is slowly through a new lease. And if you're gonna do that, you get time slow over time to transition to rubs and not all bill pay. But then what happens is if you do that, some people not likely might leave. So there's that risk that if they're good tenants, they've been there for 20 years, that's their home, and you start doing all these major changes, then you might lose a good tenant and put in another tenant that may not be so good. So I realized, I was like, you know what? In this situation, we keep all bills paid, but let's keep the rent higher. So effectively, it doesn't change the system, but we increase the rent. And that's how I kind of did this fashion versus when a new lease comes due, then you put no bills paid and charge them rubs, and then you start converting. That takes a while before you can convert these 56 units over because the leases end at different time periods. Okay. Um, so I learned that kind of the hard way in a way because I didn't expect all this. And what I did not expect was when I took over, I hired a property manager to help me run it. I trusted them. And what happened was, and in the unfortunately the mentorship program, it stops when you close the deal. And then after that, asset manager is almost like afterthought. So then I had to figure out like, okay, I closed and I trusted the property to do a job. And I didn't go there that frequent, and I didn't go up there that much because like 3 hours away. And then we had the weekly call. She's like, "Yo, yeah, it's going well. It's going great. It's the best since sliced bread." And then we need some time to turn it around. So I gave her some time, and I realized when I went up there, I think it was a month, 2 months later, I was speaking to a local lady there and the tenants. She's like, "John, she's lying to you. She just hired me to put me the boots on the ground." So what I realized was what she effectively did was she hired an old manager and she just didn't come at all. So she was like basically lying to me that she goes there once a week. So then I realized that I had to change the property manager because she's effectively lying to me and just taking my money and not doing the work and effectively not even showing up there and just basing on the old property manager who is tricky because the old property manager has a lot of connection with the residents and she basically the problem here is when you have old managers who've been there for a long time, who actually lives there, she's a resident too. So then I had to change a new property management company. And then we had to evaluate her and say, listen, do you still want to keep her or not? Or was it as a part-time? And we said, okay, part-time work. And her work was to once a week clean out the trash and the laundry, pick up some debris, put some notices on there part-time. So we gave her like a rent discount or something. But then as months progressed, what I heard was a lot of excuses. Oh, my car broke down. Oh, and she's crying to me, all these sob stories. I'm like, no. And then I talked to my manager. I was like, is this? She said, Jonathan, you gotta let her go. She's playing two sides of the game. So ultimately, I feel bad for her, but in reality, you have to let her go because she's playing you like poker. One is like one side's of me, one side's of her, and she's playing a lot of poker here. So at the end, we had to evict her out because she didn't pay her bill. She wasn't really doing her job that great, so we had to evict her out and then just have my manager just run it part time from which was 15 minutes away to run this facility. So that's another lesson learned that when I took on this property and my first one too. Um, so we did all the LED lights. We did the low flow toilets. We come and change all the toilets to conserve the water and save. I rented out this office space after 5 or 6 months. It wasn't easy to find the right tenant. Um, and we also did something very interesting. We did like a contract with like the Wi-Fi company and the internet. We said we give you, I think it's like 19, I think it was like $10 a unit or $15 a unit. And it would charge them like I think $25 a unit. So we get $15 delta on the cable and phone and cable. And there's only one company out there in the area that controls it. They're very hard to deal with, but we finally get it through. So that's another additional income you can add to your income. And I was thinking of putting a vending machine, but I thought about it and I was like, no, because what happens is in this area, we owned a laundry machine. We had coins in the laundry machine. And what happened was I put a camera in there to watch it because someone came in, someone busted in and steal the coins. So they were stealing the coins from the laundry machine. So I had to get a new lock and I had to get a camera to watch so I can give the police the recording of who's coming in and stealing the coins in the laundry machine. And what I realized what they're doing, they're getting like a kind of like a drill, like a screwdriver. They're drilling into the hole to get the access to the coin slot. And that's how they did. But we caught them on camera and we gave it to the police. But now these days, I recommend you put the QR code, which we're gonna have in the new one in Dallas, so that there's no coins or there's no incentive to break in to steal coins. It's not much money anyway, but this is what happens in these kind of buildings, so kind of areas. So we sourced it off market. We got a good deal, 30 the door, and we're going to do like a 200,000 a time. So this is a very good price point for first deal. Okay, but I learned a lot just from this experience. So this is the underwriting tool that we use in Michael Blanc, Echo SDA, Syndicate Analyzer, and we got a 1.8 million, third rate Dora, 1% down. So that was my kind of at-risk money. The time was very favorable with 20% LTV. These days, like 35% LTV because interest is high and it's much harder environment now to get the LTVs because the environment and the lenders are scared too to give you that kind of 20% down payment. So unless the rates continue dropping down and go back to normal, this won't be for a while. So you get this 20% down. I'm not sure when you get it, but that was good back then. And 4% rate, so you really can't get that now. It's hard to get that right now. 30 years AM. So I did a budget. I got like 3 quotes from different vendors, and we had one building had a foundation had repair was 13,000. Some of the balconies here were like support beam was a little weak, so we had to fix those. The roof seal, the soffit, the drain, the signage. We want to put change a new sign. It used to be called the Colonial Apartments. I didn't like that name. Ridgewood was from what town I grew up in New Jersey called Ridgewood, which is really a nice town, more like Class A. So called Ridgewood Village Apartments. And posh washing was the power washing and all this. Renovations, I budget this. Amenity was this, 180,000. And I used up that amount. This is kind of like my underwriting. When I first did this, we were at 95% occupied. I made 10% and 3% vacancy. Other income was this. We had some IOs. So what was that? So we projected, hey, you probably get, that time because you had good leverage, good price point, like on 11% cash and cash, which is really good. But these days, but what I did was I did this actual results was I actually did it at 34% IRR instead of 19 I projected. So I exceeded it, but way exceeded it I did it in 2 years and 3 months. I got 2.4x from my investors. I was gonna do it in 5 years, but I made more than them in two and like 3 and 4 months. So I accelerated the timeline for them because I worked really hard on this one. I used to watch the cameras myself. I installed it myself with my partner, and we did a lot of work to this property. I used to go there more often after the property map incident. So I learned a lot from my first deal, and I was able to achieve the results. But it was hard. It was a lot of work. It was hard. So some of the key takeaways that I can tell you personally was that I'm glad I had my mentor help me get through the close and underwriting. Learn as much as you can. I wish he helped me in the asset management side, but that wasn't part of the program. So I learned that kind of on my own with my partners. You have to manage asset very carefully because that's the most important thing afterwards. And you have to have KPIs and a weekly meeting with the property manager to surprise visits as well to make sure that it's coming to plan. So, we have one here in Dallas. My partner goes there, and we check up on it. And then I can go there if I want to, but my partner goes to check up on the plant here in Dallas. So it's very good. And that one's doing very, very well. Um, so just remember that in life, nothing goes smoothly. It's always going to be like ups and downs. There's always going to be turbulence, just like in anything you do in life, in relationship, in personal life. And you have to adopt, learn, and then change and pivot for success because you had the inflection point where, like for me, we had that manager in the beginning who trusted, and she basically lied to me saying, "Oh, he's doing very well. You don't worry, Jonathan. We got to cover for you. It takes time." And then when I go out there, I found out that wasn't the case. She was a problem. She didn't go check up on the units. She wasn't even managing it. She hired a lady and just left it there. And then she charging me the money. So I realized so I had to change and adopt and turn it around for my investors. So build a good team and reliable partners. So you want to, reward back the reliable partners that you trust, you work with, and try to build it. Like me and my mentor we have a very good bond. We trust each other, so we can help each other through tough times. He needs help now on a deal. I'm gonna look at it. If I like it, then I'll help him on a deal. So he's also growing a lot, and so always learn, network, and grow. Take massive action to success. So this work is massive action. I install the cameras myself. I used to go all the time, every 3 weeks, drive 3 hours, and I used to, talk to the on-site manager every single time. Weekly meetings. We had a lot of storms, but thank God it wasn't major. And I had to sell it because, you're worried about the tornadoes sometimes it comes in. So, and your insurance. So to operate at a high level, you need to work smarter and not harder and leverage the tools that help you. And always, yeah, think with a positive mindset that you can achieve great things. So that's what I think my takeaway is that you have to be like, a giraffe. You have to be like, think on a high level and your vision. And don't be like a turtle where you're down there and you can criticize, you can say all these things, but your view is at the lower level. You got to think more at a higher level and you can achieve great things by doing that. And there's a lot of ways you can do that through tools and mentors and everything else can help you grow. So So I think this is kind of like I just want to tell you this, and I want to kind of yeah, I mean, ask a question. You could talk and ask me a question here to help you. So let's see, Justin, Conrad, Dorian, and Michelle. Any questions? You gotta mute yourself.
Hey, Jonathan, it's
Yeah.
Justin. Quick question for you. I know it's been a challenge for you at times to find, trying to find a good manager for a property.
Yeah.
And I just, we've discussed it. I've struggled with that as well. Any advice or takeaways on like selecting a good manager or even someone for like a caretaker type role?
What we did here was here's my advice. I started building my Dallas here, and we went to like five property managers, and we selected the one that I believe was most that I trusted her. We aligned together, and we also she also comes to my meetup once a month. So like she's not hiding anything. She comes to me, and then we talk every month. We talk on every week. So we build that relationship, and I trust her, and I see her working hard. So that's how you got to choose it based on the character and integrity. The most important thing is character integrity, and also the skill set, right? They have to have skills on how to run it and do it. But but that's but the most important is integrity because what I realized was that person who I hired me had no integrity. She just kept saying like, "Hey, I can. It's fine, Jonathan. Don't worry." But she had no integrity. Tell me, "Hey, I can't handle it. You should find someone else." She just said that up front. She didn't say that. So she took it was over her head, and she just didn't want to admit it. And that's what happened, Justin. And then ultimately, when you scale and you build a base, I will recommend you vertical integrate and you hire your own on-site staff, and then you have your own bookkeeper, and then you just have like your own like management company, a maintenance guy, and then your own manager later on. So we're gonna build up like this, and then if we'll let you if Alicia's working fine and we're okay with it, it's fine. But at some point later on, I want to vertically integrate this in where I live, so I can have my own sort of on-site manager and everything else in this in my area. So, and she could be work for me too. I mean, ultimately, if she wants to. Does that help answer, Justin?
Yes, yes, thank you.
Conrad, any question? Jennifer? Hey, Michelle, how you doing?
Hi,
No
Jonathan. How are
questions for me.
you?
Thanks for running through it, Jonathan. Appreciate hearing your perspective.
Yeah, Michelle, how you doing? How's it going?
Oh, great. Thank you. So
Thank
yeah,
you.
I put in a question in the Q&A. So yeah, just thinking that I am I'm actually located in a state that is not great for multifamily investing, and because I live in an expensive market, and
Yeah.
like I guess a lot of us are also investing out of state. So yeah, what would be your advice to avoid um uh, like problems such as like not being close to a market and like building that trust with a property manager who you consistently have an eye on and make sure that like that person is performing.
Yeah, I'll say partner with someone locally with boots on the ground that you can work with and trust. And then that person report back every week in a weekly meeting, take pictures, and help you be boots on the ground so that you have a good feeling that it's going well. And you come out once in a blue moon, come out here. Um, have cameras, and you can watch the cameras from your phone. That's what I used to do. And that's how you build that up. I know you live in what, is that California? Is where you live?
Yeah, I'm in Washington, so yeah,
Yeah.
equally far.
Yeah, that's very far. That's like Seattle, very far.
Yep,
So
yep.
yeah,
But
so
like
that's
yeah,
what I
great
recommend.
advice.
Yeah, I
Hmm.
recommend that because, for me, I right now I try to do more locally, like within 2, 3 hours I could drive there. That's kind of what I want to do. In a couple of hours I can just drive there, I can see myself. And I have a partner who can drive, who can go there and take pictures and help me. So
Oh, thank you.
thank you. And then Durian, the Rana person. Okay, Jennifer, any question to you? Okay, so what I want to explain to you is that proximity is power. So I want you to understand that, I have mentors in my life, and these mentors will help you grow. Like Michael was an inspiration. This guy had a very good story. He was on my podcast. You want to listen to his story, go Mike Moreno on my podcast. A very, very pretty crazy story, but it's a good lesson. And then these are my friends and capital raisers. We help, and my investors. We did the large deal in Arizona and self-storage. So I think you need proximity is power. Hire mentors, hire coaches. If you need anything, you gotta hire them to kind of help you accelerate your growth. If you're new and you need a mentor, let me know. I do some private coaching as well. We can talk about that. But I know a lot from self-storage to industrial to multifamily underwriting and capital raising. I've done it for 7 years, probably raised over 10 million myself, done 15 deals and sold four right now. So this is my first one, but I've done over 2,300 units. This is my 15th deal I closed. We have no deal, and I have two deals in the pipeline right now. One of them's here, one is another one in Indiana. And I also may even partner with open a Japanese ramen here locally with my friend if he wants me to help him. So that's what we're doing right here. So okay, well I think I hope you guys learned a lot from this session. Any question, you can just email me, john@graysoncapital.com, and I'll try to help you like best I can. And then Michelle, I have a monthly Graystone Mastermind. If you want to come join, let me know.
Oh, thank you so much.
Okay.
Thanks,
Okay.
Jonathan.
Thank you guys. Have a good night.